Success in Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You're listening to the Financial Survival Network. It's Kerry, Lutz, and I haven't had him on the show recently, but Ross K. Urken with TheStreet.com is with us. We're talking about how you can hack away at that massive student loan debt. And Ross, welcome back. It's been a while.
Yeah, thanks so much. Nice to be back.
Hey, so we keep hearing, literally every day, you hear it on some show somewhere. Student loan debt, out of hand, bubble. It's massive, over $1 trillion. Anytime debt reaches over $1 trillion, it starts looking like a bubble, doesn't it?
It really does. To put this in perspective, of course, mortgage debt is toward $8 trillion, but student loan debt now is at 1.1. Some say 1.2 trillion. Car loans are at $955 billion, so less than student loan debt. Credit card debt is only at $700 billion, and home equity loans are at $510 billion. So we are facing something that I think has long-term effects, because if these students are unable to get jobs once they graduate, and they're still paying off this massive student debt load, the average graduate's coming out with about $30,000 in debt. How is that person going to buy a house, buy a car? So there is kind of the aftershock effect in the economy. And this isn't even taking into account the fact that about 11% of student loans are past due. So the delinquency rate is high. Though President Obama is trying to kind of further a student loan bill of rights, there really hasn't been enough implemented to figure out, should we allow student loan debt forgiveness, or should these be allowed to be forgiven in bankruptcy? So I think there are a lot of factors at play here. Legislatively, while we may have to wait for the tide to turn, there are a few things that the average consumer can do to be smart about the debt load.
Yeah, and the whole issue of getting rid of the bankruptcy exemption, most of it's got to come from Congress, although there are people who are now asserting fraud in their bankruptcy filing, saying effectively, look, this private university, this private college made such and such assertions when I took out the loan that turned out not to be true.
Right. And I think that's certainly happening with with for-profit colleges. If you've been following the whole scandal with Corinthian colleges, a lot of these colleges were making gainful employment promises, or legitimizing basically degrees that were a sham. So people went into debt for something that isn't serving them professionally, and I think they're striking back. And the CFPB has been involved, and a lot of nonprofits are also fighting the cause to have greater protections on students and make sure they're getting a legitimate and affordable education. But I think the average consumer who's going to a standard university that's, either a state university or privately owned, it's, a big challenge for someone to afford the education and then handle that debt load responsibly.
Yeah, it's getting worse, and with job opportunities for newly minted college graduates at really historic lows, they've run out of options, haven't they?
They have. I think that, people are really going for this sharing economy or temporary economy. People are not necessarily even seeking full-time positions because the unemployment rate for millennials is double or triple that of the national average. So whatever people have to do to kind of hustle and scrape by, they'll do. But that still doesn't change the fact that you have this massive debt load. So I don't know, at Main Street and the street, we kind of have as our thesis the financial literacy, that knowledge is power. And I think that people really just need to get organized. A lot of people, and this is a scary fact, don't even know how much student loan debt they have. They know that they're paying it off. They see the bill come in or through the mail or electronically. But they really should be logging onto the National Student Loan Data System, and that provides consumers with all sorts of information, whether it's loan grace periods or information they may need about particular lenders. So, just arming yourself with that arsenal of basic facts, I think, goes a long way for the average person.
Yeah, that's for sure. And these loans are really a problem because, like we said, they're not dischargeable in bankruptcy. And it used to be that it was just the loans that the government made to you weren't dischargeable. But in the revision to the last revision to the bankruptcy laws, somehow all that got changed. And then private loans from banks, as long as they were tax deductible, the interest, qualified loans as they're referred to, all of a sudden they became non-dischargeable in bankruptcy. And that was really an immense hardship upon students and the newly graduated students. And nobody even knew this was being done. And yet it turned out to be a huge giveaway to the banks.
Absolutely. If you can pay off your loan, then you're accruing more interest and you're not even getting down to hacking away at the principal. You are basically investing in the belief that you'll borrow money that will be used to give you a degree that will make you more employable, of higher earning power. And a lot of people are finding that's not necessarily the case. So people are aiming for 10-year loans. That's kind of the industry standard of student loan debt, but it's not for everyone. A lot of people might be better off exploring what's called IBR, income-based repayment, or the PAY program, which is pay as you earn. So it caps your monthly payments based on your income, and it's 10% of monthly income for pay in particular. And, that debt gets forgiven after 25 years. So you aren't the Sisyphus pushing the student loan rock up the hill. It does eventually go away. Of course, this does put the onus on the earner to continue earning consistently, to be very vigilant about statements and making sure loans are paid off correctly. So I think that the fact that we've gotten ourselves into this mess, there are many theories. Some people say, look, since 1980, we've had basically 1,000% increase in tuition costs. It far exceeds any other commodity, any other good or service. Forget about inflation. And people are stuck with this. We're starting to see the average college cost in the 40,000s. Soon enough, it will be in the 60,000s, and that's just not a sustainable amount for the common American on Main Street. And I think a lot of people are beginning to consider what is the return on investment for these loans for going through and getting the degree. People are searching for alternative, cheaper ways to do it, maybe a 2-year community college program and then switching to a 4-year university for the last 2 years. But I think that there is no magic bullet, and a lot of people are skeptical about these cheaper alternatives because they want the brand name, or they want what they're all in it for, kind of intellectual training or professional training that a university can provide.
Yeah, for sure. And it is a huge, huge problem, but it's got to be dealt with. And alternatives, options for sure to start out in a community college. There's absolutely nothing wrong with that. And that's what many of you out there are doing. In fact, go into the community college and basically get your credits there. In fact, smart people even overload their credits there, because a state school, if you go to a state school, they're bound to accept all of those credits from the community college within their state. So you overload your credits there. You can effectively get 2.5 years worth of credits, even though you're only supposed to get 2 years at that school. Another thing that people do, advanced placement credits in high school are often good for college credits. They count as college credits. So there's a lot you can do to get maximum advantage and decrease the loan balance when you get out of college. And most important, like you said, is treat it as an investment and figure out what your return on your investment's going to be. There's nothing wrong with learning for learning's sake. I mean, I'm totally an advocate, but use your head here, because you're saddling yourself with debt for your entire life. I mean, you've seen situations like that, right?
It's true. I think that proactive decision-making is rare, but maybe will become increasingly common, because when you're 17, 18, that's often just what you do. You go to college, you take out the loan that's necessary to get there, and you're not necessarily thinking about the future and the debt burden that you're saddling yourself with. So people, I think, need to be increasingly reason-oriented and need to think about the consequences before they make decisions. But, you have lots of people already in school, already kind of tangled up in blue. And I think, for them, it's learning about things like consolidation. Maybe you have a lot of streams of lending, but if you're consolidating your different borrowing streams out there, you are able to often get a lower interest rate. And oftentimes, by the time people graduate from college and have used their credit card and hopefully are employed, their credit score has improved. So you can often get better interest rates. But that was the other big Elizabeth Warren controversy, where she was fighting to have refi available on student loans, and she got a lot of pushback. And I think that this is all part of the ongoing dialogue, but there are a lot of liberties that aren't afforded the student loan borrower, because you've signed a contract, you've gotten yourself into this mess. It's easiest just to pay it off. And I think a lot of people, as we've seen with this debt load, are struggling.
Yeah, one thing I think that should occur is, just like elderly people who are looking to get a reverse mortgage, the HUD requires them to get counseling. You know what? Every young person out there who is going to go into HOC, potentially for a substantial part of their lives, should be required to get counseling, educational financial educational counseling before they go into hock, before they make what could be a very bad decision. And there should be projected income requirements and all these things that a lender would look at their investment and let them really analyze this decision from a very rational standpoint. Because look, if the elderly got to do it before they get a reverse mortgage, why shouldn't a student who has no life experience, presumably little or no life experience, Ross, with matters like this? They've never bought a car, probably, never qualified for a car loan, never bought a home, and now they're making a decision here for hundreds of thousands of dollars, potentially, a six-figure decision that could be even more than that with the interest payments over time. Why shouldn't they get counseling?
Yeah, I mean, that's really the conundrum here, that you have no other consumer lending that happens without consideration of credit score, of a borrower's credit worthiness, and all of a sudden, people are being handed hundreds of thousands of dollars to take out a loan when they haven't proved their worth or responsibility in terms of paying that loan back. And, often I guess the assumption is that the parents might do it, or that it will happen over a period of time, and how lucrative that will be for banks and the federal loans as well. So I think that that opens up a whole Pandora's box for students to be screwed over, essentially. And the proper due diligence hasn't been part of the system. Exactly.
Much like those people who got the subprime loans in the late 90s, early 2000s, who really didn't know, with the low teaser rates, interest only and all that, didn't really know what they were doing. And a little bit of financial education goes a long way.
And these students are no prime loans. They don't have a credit history most times. And I think that itself is dangerous.
Yep, very dangerous. And they're sitting ducks, and they don't understand non-dischargeability under the bankruptcy code either. Nobody's bothered to explain that one to them. And hey, it's something that really could have dramatic implications for their adult lives, and literally turn you into a debt slave. And how do you explain that? It really puts off buying a home, buying a car, starting a family, all those things that comprise the American dream, right?
Indeed.
So start looking for solutions. They're always talking about education. Well, here you are. You're taking out a loan to finance your education, and your loan choice is based on total ignorance when you get down to it, right? Total absence of life experience.
It is. And I think what we keep saying is that is, I think, what is separating people from, a knowledgeable borrower who's an adult from a teenager who's taking out a loan, that, the person doesn't have the wherewithal, the knowledge base, the perspicacity into the future to make an informed decision. And would some counseling help? Probably. The fine print and the pamphlets aren't really helping with disclosure and warnings and admonishments. So I think more often than not, the consumer does have to educate himself, has to be aware. And I think, as the headlines continue to stream across the papers and the internet, that the student loan crisis is here, and that it's become a problem, maybe people will be extra careful before they, get into water too deep.
Well, we can only hope, that's for sure. Obviously, something needs to be done here. wouldn't it be nice to see the private sector step in, come up with a whole bunch of educational materials, services for the young borrower and their families? Because oftentimes, hey, how many of these people are the first member of their family to go to college? And that is an inducement, much like the smell of a new car that sells a product that oftentimes is way more or not necessarily the proper product for the consumer to be purchasing. And upsells, all that takes place. And, Harvard, Yale, or those top tier colleges, not for everybody. And maybe you can get the same education or the education that you need going to a lesser school. Anyway, Ross, so we find your work at mainstreet.com and thestreet.com.
Correct.
And
there's plenty more material on student loan debt and great ways to pay it off.
Yep, absolutely. And hey, thanks for being on. And hey, you find a link over at the show notes to this interview on financialsurvivalnetwork.com. Don't forget, sign up on the mailing list. Got a couple of webinars coming up, real important ones. And Ross, we will talk to you again real soon. Thanks so much.
Thank you. My pleasure.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.